outpacing in some markets home appreciation and certainly keeping up with it in others. So if you have a chance to buy a 4-unit property and live in one and collect rent on the other 3 doors, that's an amazing way to get started in real estate, because you're going to get the advantage of the primary residence loan programs, right? You're buying your home, as well as the advantage of rental income, and then appreciation across the board. And certainly, the rent value of that unit, should you choose at a later date to move out of it and go buy something else for yourself, that's going to be easy to rent, because it's already, the other 3 units are establishing a rental price and a desire. We call it the absorption schedule. There's already a quick absorption rate in that market on rents, assuming, that everything's occupied and rents are still, where they are now and you're collecting rent. It's going to be an easy unit to rent is where I'm going with that. So I think it's a great idea. It's a great strategy, and buying it with the intent to live in it is a wonderful opportunity for you to utilize a primary residence mortgage program. So if you have questions on that, the Anytime hotline is 561-291-8569. What I mean by anytime is truly anytime. If Dom and I are not in the studio doing this show, that phone number pushes to my office. So somebody at the office will grab the line, and if you need me, they'll get you to me, and we can talk about that further. But yeah, 561-291-8569 is the Anytime hotline. But hopefully that answered your question. I think it's a wonderful strategy. I commend you for looking to grab a fourplex in this market. We talked about a score that was in the Jacksonville market last week, where someone had found that 7-unit property. Different loan program for him because it's a 7-unit property, but he's doing the same thing. He's going to live in 1 unit and rent all of the others out, and be in a great cash flow position. So hopefully that helped. If you have more questions, just give us a shout on that. But let's throw it back to Dom and see if we have another question teed up.
We do. Denise left us this question on the hotline. Denise said she's relocating from another state. How long do I need to be on the job in Florida before I could qualify for a mortgage?
Hey, Denise. So you and everybody else are relocating to sunny South Florida. Well, I'm assuming South. Anywhere in Florida is sunny by comparison to a lot of the country. But great question. It's a question we get often. And there's a few different answers to that question. So I'm going to start with, and I'll give you some examples because, as I mentioned, we see this a lot. Recently, we've had a client relocate from New York, and they're in an executive level position with their company, and they've accepted a position down in Florida, a comparable position with a comparable corporation, and they don't have to be on the job one day down here. We're using their offer letter. They've gotten an offer letter from the corporation that they're going to work for. They've got great work history with their existing corporation. The Florida employment opportunity is at the same or more, which is the key, income as the New York job was. And we use the offer letter to qualify her. So she moved down, bought the house, and then went to work. So you can do that. Now, there's some caveats to that. If you're switching careers and you have no history in the new career, so let's say you're a nurse and you're going to become an office manager. Unless you're an office manager of a medical facility where your nursing skills are going to help, it's unlikely that that's a like enough position that you're transferring to qualify. And there may be some instances where that would work if you were a nurse with some managerial responsibilities in a doctor's office. They might translate, but that might not be the best example. But if you were a nurse and you're going to go sell advertising for this radio station, you've got no history as a radio advertising salesperson, and you're going from salary to commission. In that instance, you're going to want to establish yourself in the new employment role and establish a new income base to qualify. So you will have to be here for a period of time. Also, too, I had an interesting scenario where someone is relocating from Ohio and the majority of their income is currently commission, and the client base that they serve is local, meaning he has to be face-to-face with his clients. He can't serve his clients over the phone. which is interesting in this world that we live in because COVID has kind of made us all remote. But nonetheless, his profession still requires him to be in his territory, if you will. So he's relocating to Florida. He's unable to perform his duties remotely. So he's taking a new position with a similar, not the same company, but a similar company. And because he's commissioned only, we need him to establish here in Florida. He's not carrying over his client base. Therefore, he's not carrying over any of the established commissions. So in that instance, there is going to be some time requirements on the job in Florida to establish himself before he's going to qualify. So hopefully that gives you a little more insight. I would be happy to answer that question in greater detail. If you want to give us a shout during the week, 561-291-8569, or visit the website, www.mr.mortgage, or just shoot us a text and say you want us to call you back with more details, because there are some nuances. It's going to have to do with the job you're leaving and the job that you're taking in the new state, or in Florida in this case you mentioned, and then make sure that the salaries are at least the same, if not more, because then we'll be able to use your salary history in the debt to income qualification. So hopefully that helped. There's a few nuances to that question. So if you need more information, I encourage you to give us a shout or visit us online, and we'll be happy to help. But yeah, we see a lot of relocation, and not just to Florida. There's a lot of relocation to Texas, to Arizona. The cool thing is, if you're able to keep your job and work remote, that's a super easy transition. And there's a lot of people doing that. So you don't have to establish in that instance employment in the new state, nor do you have to even have an offer letter, because you're staying with your current employer. In that instance, your HR department will just acknowledge that you're able to maintain your employment at 100% effectiveness and salary, or commissions in that case, if you're able to go remote. So hopefully that helps. There's a lot of people shuffling around the country, relocating to different areas, and the loan programs have accommodated that. So you hear the music. We are headed to a break. Encourage your questions to 561-291-8569. That's 561-291-8569, or visit the website, www.mr.mortgage. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right. We are back. My name is Mark Eitel, host of the Mr. Mortgage Show, and we are happy to take your questions and do our best to answer them at 561-291-8569. That's 561-291-8569. That is the Anytime hotline. You can shoot a text or give us a phone call to that number. As always, visit the website, www.mr.mortgage. Mr.Mortgage. And you heard me talking in the first segment about the video series that we're now going to do on YouTube and the Facebook page. If you want to find that, just go to the www.mr.mortgage page. And if you scroll to the bottom, there's a Facebook link and a YouTube link. Or you can just search the Mr. Mortgage Show in Google, and they will both pop up. So I'm going to try to take some of these topics where people call during the week and they want a deeper dive on them. And if there's enough, which I think there will be if the last few weeks' questions are any indication, if there's enough of a demand and enough questions being asked, then we're going to do one each day and just do kind of a daily briefing at the end of the day, maybe 5 minutes, just a quick hit to kind of follow up on some of these questions that require a little more information. So check that out when you have time. That's on the www.mr.mortgage Facebook page. But the links are on the bottom of the Mr. Mortgage page. So, and let me know, drop your comments in there. I'd be curious to know what everybody thinks, if there's some other topics they want covered. If you want a specific topic covered, the easiest way to do it is to call or text to the 561-291-8569 number. So speaking of that, questions being called or text or emailed in, I'm going to throw it over to Dom, my producer, and see what he has.
All right, we have Sherry emailed this one to us. She's asking, I'm hearing a lot about a recession in the news. What will a recession do to the home values?
Okay, that was Sherry?
Yes, it was.
All right, Sherry. Hey, that's a great question. And honestly, that's what we're hearing the most of lately. People are concerned. They're seeing inflation. They're seeing a creep in interest rates. And now it's pretty clear that we're going to enter a recession. When it happens, whether it's in the next 6 months, if it's in the next 6 weeks, we don't know. We don't know how deep of a recession is, that we're going to experience, but it's highly likely that we're going into a recessionary period. So because I'm getting asked this question so often, and I talked about it a little bit last week when I used the Johnny Carson show analogy, right? Because we watch the old rerun TV channels, and Johnny was talking about, 12% inflation that particular episode. And then I dug into the interest rates and the appreciation rates of those months specific to that show. So this is on everybody's mind. And if you remember when I talked about that, the homes appreciated and we were experiencing high inflation, double digit, and high mortgage rates, also double digit. So because of that, I felt pretty encouraged that, real estate will survive, most recessions. And I'm not the only one that feels this way. I dove into the data and I looked at all of the recessions back to the World War II era. And I discount the housing bubble burst of, 2008, 9, and 10, because that actually caused the recession. Housing prices declined, so that's what caused the recession. But a normal recession that's caused by other economic factors, housing seems to do pretty well by comparison. So I printed out just a very brief summary, and I think what I'm going to do is I'll probably do one of those deep dives on the YouTube or Facebook channels about this, because we're getting so many questions related to this. But in the early 70s, we were in a recessionary period from, I believe it was November of 73 to March of 75 is what they're calling that particular recessionary cycle. And during that time, we saw homes appreciate 11.7%. So in a recession, we still saw appreciation. Now, whether that appreciation outpaced inflation or the cost of money, that's all secondary conversation. My point in all of this is only to share that the home value itself went up. And whether we're in a recession or not, we're going to need homes to go home to. You need a place to live. So I guess I found it encouraging in this data that during the recessionary time periods that were outlined in this report, home values did pretty well. There was another recession in the early 80s. Home appreciation was 4.5%. Right after that, we had another recession in 81. That was an energy crisis. The energy crisis recession, we saw home values that managed almost a 2% increase. So where I'm going with this